in the beginning, you're seeking, okay, like I was as well. But there's a lot of people who constantly seek. They seek for years. They're attending seminars or doing this, right? They get really clear. I mean, the way I would do is get really clear what you want. I want financial freedom. Okay, well, what vehicle do you want to get there? Because there are different vehicles to get there. You can start digital marketing, for example, right? If you start creating courses or write books, right, that could generate some passive income. Are you a more digital marketer? Are you a more a course guy? Okay. Do you want to maybe buy some businesses, right? There's people that teach how to buy businesses, buy some laundromats, buy an electric company, okay? Like, do you want to be a business owner like that? Or do you want to use real estate? Let's just start there. Like, where's your affinity? And then when you kind of narrow it down in the process, talk to people who have done that thing. Talk to people who do own laundromats, who have bought a business before. Talk to people who have built a digital marketing business. Talk to people who have actually achieved financial freedom with real estate.
Welcome to the Creating Wealth Podcast, where Kyle Curtin takes you on an extraordinary journey alongside renowned multifamily real estate experts from every corner of the United States. We teach you how to harness the power of real estate investing and witness the transformation of your wealth building strategy. Let's create wealth together.
What's up, guys? Welcome to episode 186 of the Creating Wealth Podcast. Today, we have the honor of chatting with a very special guest. Many of you guys that lean more into the commercial multifamily space will recognize him. Michael Blanc is one of the top influencers in the apartment investing world in the country. He is a partner in Nighthawk Equity with over $300 million in assets under management across the country. He's a fellow podcast host of the Financial Freedom with Real Estate Investing podcast, best-selling author, and teaches many how to harness the power of apartment investing. What's going on, Michael? Super excited to have you on here, man.
Yeah, it's great to be here, Kyle.
Absolutely. Yeah, man. So the way I like to start these off is like kind of jumping into your story, wherever you feel comfortable jumping in, kind of how you got started, kind of built up everything that you've kind of, built up to this point. And then, kind of what you're looking to do now. And I guess, goals going forward, that kind of thing.
Nice. Well, I grew up like maybe a lot of us have, and taught to go to school, get the best grades I can, and get a good job with benefits. And in my case, I chose a path of being a software developer. So I was actually an engineer. I have a master's in computer science, Kyle, which I then duly threw away. I joined a software startup in the late 90s. I spent some time at AOL and things of that nature, which was really cool. But the software startup was really cool. I joined in 97, and 3 years later, this company called Web Methods went public. And that was really wild, and put a bunch of money in my pocket because I was one of the early employees there. And I coasted along until I read The Purple Book in 2004. And that really threw me for a loop because I thought I was pretty smart. And apparently I had completely not known this whole thing about passive investment existed. And so after about 3 months of confusion, I came home and told my wife I'd quit my job. She goes, "Oh my gosh." I said, "What's the plan?" I said, "Well, I don't have one yet, but don't worry, we have a bunch of money. So what can go wrong, right?" And unfortunately, a lot of things go wrong. But one of the things I did after I quit my job is I kind of studied how money really works. I took a bunch of seminars, boot camps, courses. I traded stocks and options for a while. I flipped a house or two. I had a rental for a good measure because you got to check off the real estate box. But my big idea was to get into the franchise business. I mean, right? You probably do the same. So I went all in, though. I took all my IPO millions and bought myself a 10-unit restaurant franchise and hired a guy to run it all. And then at the height of it, I had 8 restaurants at one point, and things were pretty good for a little while until the recession rolled around. And then things no longer went very, very well. Revenue was down, profits was down. The problem with ours is it never recovered. It was a downward spiral that led to me having to let go of this guy who ran all the restaurants and now was driving to running these restaurants 6 days a week, an hour away, one way. And I put my heart and soul into it. It was for nothing. So I finally realized I needed to sell it and couldn't sell it. There's no one who wanted to buy a restaurant after the recession that was losing money, which it was. And I was losing lots of money. So I blew through all of my cash, all of my savings, and put a couple $100,000 of debt on top, which I'm grateful for because it allowed me to get out mostly without lawsuits while I'm trying to get myself out. So while this is going on, I need to do something for income. And I flipped a couple houses with great success in 2006 and 2007. At the time, I learned about that. I had a mentor, actually. I learned about commercial real estate for a little while. So I remembered all this stuff, and I said, okay, I'm just going to get myself out of this mess by flipping houses. So used hard money, started, we're buying 2 houses every single month, and started doing some private lending as well, which was pretty cool. And then I realized after about 3 dozen flips that flipping houses wasn't very scalable. Also, wasn't very passive. And so I thought about maybe building a rental portfolio. But if you do the math, right, if you can get each house to cash flow $200, and I needed $10,000 a month, I'd need like 50 houses, right? And it was insane. So luckily, I skipped the rental part of it, and I discovered the solution a bit by accident, because in 2011, one of my wholesalers got me a 12-unit in Washington, D.C. So I dusted off my old commercial real estate stuff, and I looked at it, and I was like, yeah, let's do this thing. And I thought it'd be pretty easy, but I struggled with everything. I struggled with raising money because my lenders, who wanted their money back in 6 months with a 12% interest, were not interested in a $50,000 over 5 years. So none of these investors invested with me. I was like blown away. I had to start from scratch. Then I had a professional tenant in there who, among other things, didn't pay his rent, but also sued me every 6 weeks. I had the wrong property manager in there, and I shouldn't have bought in the district in the first place because of the pro-tenant laws. So I'm flipping my way out of this stuff. I'm losing money on the restaurant side, and I'm making money on the house flip side. And now I got this apartment building. I'm working 80 hours a week, and I'm not making any money. Until finally, this thing calmed down after about a year and a half. And the light bulb went off, because apparently I'm a slow learner, that, oh my gosh, that's actually passive income. Now, it didn't start off that way. It's kind of a nightmare, but it turned into more of a passive income. And that's when I started shifting from one to another. By the time I actually started taking action, it was 2014. I started blogging about it on the Biggerpockets. I created this analyzer tool called the Syndicator Deal Analyzer, created a course. And in 2017 really is when, through all that stuff, people were bringing me deals and bringing me capital. And that's when I kind of created Nighthawk Equity, which is our investment firm. So today we have about 2,000 units worth about $300 million. And my mission really is financial freedom with real estate. So we have an educational platform, a podcast, a book, so that I can finally talk to the millions about their misguided desire to become financially free with single family house investing. It just doesn't work. It works for a very small period, a small number of people. I don't know, maybe you can relate, who really grind it out and create scale in it, but not really. Versus apartment buildings, a lot of people are able to quit their job within a year or two. And that makes it, in my estimation, literally the most powerful business opportunity on the planet, even certainly out of real estate, but also certainly for franchises.
Yeah, absolutely, man. I was writing a couple notes down when you were talking. A couple things I definitely want to jump into. Super cool story, by the way, man. And I think it's incredibly interesting and very admirable as well, of, in the beginning of your journey, when, you jumped like head first into the franchise space, like not with one franchise, but like 8. Like that's wild.
I know. I hear you.
No, I admire it, man, because that's like, going like both feet in, like jumping in like completely, you know what I mean? Not just one, but
I had to make up for lost time. Like I'm in my mid-30s at this point, right? And make up for lost time. And so, go big or go home, right? So exactly. I just felt like, and the thing is, you get happy years on, especially or maybe I do, but a lot of people do. And you're like, okay, this is a straight strategy. I'm just going to go all in, because I had a spreadsheet to 20 units in world domination. And I never considered the fact that there might be a recession or something going on, some piece of legislation, in hindsight, even if I saw some of my fellow franchisees struggle after me, who were, let's say, in Oregon, Seattle, right, where the minimum wage went up to the point where they could no longer make money. They had to shut their doors. Now, who's going to go, oh yeah, in 5 years, they're going to raise the minimum wage to $20. Meanwhile, I'm paying my cooks $8.50. And I'm making some amount of profit. 20 means that everyone's going home, right? So like, these are things that never occurred to me, that there could actually be a downside. So I'm happily personally guaranteeing rental loans, not only loans, but also leases and that kind of things. I never had this idea of, hey, maybe you should go a little slower. Hey, maybe actually I should have an advisor or a mentor who's actually built a franchise before, because that person would have said, hey man, go a little slower, get one open, get it, make sure it's spitting off money, and then go to another one. No, I went 3 in 1 year. I built 2 and bought 1, right? And so there's a lot of things I would have advised my younger self, but that was certainly one of them.
I hear you, man. And it's one of those things too that's fascinating, right? Because I feel like there's a lot of people out there that, just exactly tell you like, oh, like, go hard or go home, you know what I mean? And like, why start with one when you could start with 5 or 10? But like, there's another part of that equation as well, like a degree of risk and kind of generally speaking in a sense. But
Well,
yeah, it's fascinating.
I think scaling is important, but you got to do it at the right time. I understand it's a lot better right now. So I'm trying to scale my educational company and the investment company, right? And you can only really scale once you have a repeatable process in place, whatever that is. Now, in the franchise, I did not have a repeatable process. It was brand new. So why in the world am I scaling an unknown process, right? If I can do it 3 times in a row, one could start saying, my gosh, I think you got it down, right? If you did now 2 at the same time, for example, there would be a higher probability, right? Same thing on the investing side. You got a team, you've done 5, 6 deals, you have a repeatable process of how you bring in capital, how you cultivate, how you do investor relations, how you do the asset management, things of that nature. You've done it now 5 or 6 times. You're like, okay, I think I'm getting it. Now it's time to kind of see if I can scale this a little bit. But then you get the marketing route, right? Marketing is a whole new ballgame. How do you raise more capital online? That's like a totally different business. Now you're in the online marketing business. You're not in the real estate investing business anymore. You're in online marketing space. And I've been trying to crack that nut for 2.5 years and trying to get very close, right? Because you're getting into paid Facebook traffic, all new things. You need someone to answer phones. You got to be able to convert. Otherwise, you're just wasting money. Well, you can't really scale until you have this process down. But once you have it down, now you're spending $100,000 a month on Facebook, but not before then.
Yeah, it makes a lot of sense, man. It's like having that.
The problem is, Kyle, I don't have that kind of patience.
I hear you, man.
I've been forced to develop that patience, but to me, everything takes too long. You know what I mean?
Yeah, exactly, man. No, amen. Exactly, time's ticking, you know what I mean? And days are going on and that kind of thing. And we want it yesterday. I feel like that's, how many of us investors and that kind of thing are wired, man.
The thing is, my thought is a little backwards because you still have a 5-year plan. You're still going to hit it, but you're going to hit it differently, right? It's more of a hockey stick thing. It's going to kind of go slow, go slow, go slow, go slow. And then at the very end, you're going to go up, right? What I want to do is I want to do straight line. I want to go from where I know 45 degrees right up to where my goal is. It just doesn't work that way, right? You make too many mistakes that way. And so what really happens is you're going straight for 45 degrees and then you come straight back down and you never actually get to your goal.
Exactly. And it's sometimes can be kind of a hard dynamic when some of those challenges do come up, the unknowns. I hear you, man. No, that's excellent advice. Yeah. And I think one of the other things that I wrote down, man, was like the power of the influence, right? And I think it's incredibly interesting, and kind of one of those central variables of like after you got out of the franchise space, jumped more into the real estate space, started doing flips and that type of thing. Just leveraging your influence that came with that as well, and I think it is fascinating how, as exactly time went on, you start to build up this education company, your name starts to get out there a bit more, face starts to get out there a bit more, people start, coming to you probably for, more passive applications for them. So people start bringing you deals because you have that, rapport in the community in a sense.
That's the way it worked out for me, but it's not the recommended route. So when we teach syndication and apartment building investing, and also scaling, okay, I don't teach become an influencer first. It was really my calling at the time. Okay, I just felt called to share my experiences because I kind of consider myself the crash test dummy of financial freedom. So this is why I started blogging about it, and so that was really my calling at the time to kind of get the word about this thing. Hey, stop doing this thing and start doing this thing, and here's how you do it. But and it worked out well, but it takes a long time to build up that influence. What I normally recommend people do is to actually start scaling your real estate business. So forget about the influencer side. Start scaling your real estate business. Figure out how to get one deal. I don't care if it's a duplex. Just get one deal done. Learn to raise capital. Okay. Then do it again. So you can show yourself that you didn't get lucky. Okay. But then start building a scaling plan, which is around really putting a team together to get regular, consistent deal flow so you can get regular new capital coming in, not even online. Okay. You can raise $500,000, $1 million, and you should one-on-one with one-on-one people, right? A lot of people are kind of looking for the easy button. Oh, I'm just going to go on social media and someone will immediately wire me $100,000. and a lot of people come to us after having gone through some stupid program like, oh, I was unsuccessful. The program didn't work. Well, it's because of this thing. So get a few deals on your belt. And then though, you got to shift towards more of the scaling part. And that's when the influencer becomes more important, because if you've raised $500,000, or let's say you raise $1 million, which we can do, if you want to 10x that, it's going to be very difficult for you to get to 10 million without going online. So it's a whole new ball game at that point, right? It's a whole new ball game. And that implies that you actually figured out all these other processes I'm talking about before. You figured out how to manage your assets, how to get deal flow, how to talk to investors one-on-one. How can you amplify a message that you don't even know, right? So a lot of people go, oh, I'm going to go online, but you haven't even raised money one-on-one yet. So it's kind of this step process. So normally when people ask me what I did, I said, okay, I'll tell you what I did, but I'll tell you up front not to do what I did. This is the benefit of people working with me, is I can tell you all the ways not to do it, right? But since 2014, since we've been doing it now, we know actually what to do, and we've helped hundreds of people do it literally within a year. Very frequently. And so now we know exactly what to do step by step. And if you want to know what not to do, then talk to me about that.
I love that, man. And I think there's so much value in the authenticity too. Exactly. I love like recording, my journey and stuff like that as well. I'm much, smaller and earlier into things, but, of like, looking for deals and, working on properties, and in my case for smaller, multis and that kind of thing. But there's so much authenticity and like actually building the real estate, doing the real thing. And like, it's almost like you can, just by showing what you're doing and that kind of thing, people just start to become attracted to that over time and that kind of thing. And to your point, it does definitely take a while to start to get things to go. And it's, back to that like hockey stick type of dynamic, with more of a smaller gradual growth. But yeah, man, it's super real. And it's funny too. Like what you mentioned about like a lot of folks just like, jumping in, like wanting to go online right off the bat, like probably never doing a deal before, and thinking that like everything can just happen. Here's like $500,000, $1 million, like, oh yeah, like we'll just get the money and go do the thing and stuff like that. But it's like, I do find it very interesting as well, man. The quantity versus not like the quality, I guess, but like when it comes to some of those relationships, like you never know, or sure, like, you can talk to a shit ton of people online that you've never met before, and have that goal of raising a ton of money from them in mind after not necessarily having a track record. But like, it can be some of those like, one-on-one relationships from people in different parts of your life already that, a shit ton and that kind of thing.
Yeah, because people already know, they kind of like and trust you already, right?
Exactly.
You can basically convince them to take a chance on you without a track record. Okay.
Yeah.
No one else will do that. Someone on social media is not going to start investing with you if you don't have a very clear track record, right? It just, it makes, think about it. It just makes no sense for people to go on social media and start raising money when they haven't done a bunch of deals, right? I mean, honestly, like, what do you think your chances are? Oh, I've done 112 units, right? Ooh, look at me. I'm an expert. Let's start raising money online from people who have never met me before. Like, don't you think it would be a lot easier to say, hey, I've done 5 deals. I have $20 million under management. Now there's at least some semblance of a track record there. So you're going to attract some of the less sophisticated people. The more sophisticated are going to like, yeah, I'm not doing that. But you're going to start attracting, your chances go up significantly.
Absolutely. Yeah, no, 100%, man. And it's a very fascinating dynamic, and it's, yeah, I mean, cause like just thinking about it, especially from, investors that are outside of the real estate space, like some of the high income earners, maybe people from like the software space, doctors, that kind of stuff, like jumping in and wanting to, park some money in real estate, but like, who's this random dude that's hitting me up online that's never done anything before? Like, no, like, would you, wire $100,000 to somebody? Like, not a chance, but somebody to your point.
You got to figure out who your ideal investor is. We kind of call it the avatar in marketing terms. Who's your avatar, right? I mean, in the beginning, you might think it's anyone that has money, okay, but it actually isn't. And so you have to kind of know who your investor is, because that determines how you talk to people online. One-on-one, it's literally anybody who thinks has money. You should talk to anyone one-on-one, but you have to develop what that if you're going to go online, you need to pick your avatar and speak to that avatar, right? Because if you don't know who that avatar is, it could be a doctor, an attorney, or a software guy. Like, how are you going to talk to them? Versus, let's say in my case, let's say I was a software guy. Or I can even talk to franchise owners. Doesn't matter. Software guys. I'm going to talk to software guys different than I do, for example, for a franchise owner, right? Or a doctor, right? They're what they want is different. What they're afraid of is totally different. And so you got to do a lot of work before online. You have to have the conversations with people. What do they want? What are they afraid of? What are their most common questions? What are their concerns about, right? So you talk to them, so you start developing that so you can put it into your content, into your message, right? Because you don't want investors asking you 10 questions with 20 objections, right? They're out. Yeah, I get 3 strikes. And someone asks me like 3 big questions, they're not investing with me, right? So the more proactive you can be, and so therefore you have to learn your investor. And how else are you going to learn an investor unless you actually learn how to raise money one-on-one? It doesn't sound efficient, okay? But it actually gets you the goal, because if you skip that step, you're never going to get to the goal of raising $10 million.
Absolutely. 100%, man. Can you tell us the story about like I guess maybe like the first time that you raised capital, like the first ever time, like thoughts going through your head, like how were you feeling in the moment? I guess kind of how was the application in a sense, like tell us about like the first time that you like had that happen.
I'll tell you 2 stories with different lessons.
Sure.
The first one was a 12 unit. That was the first. Well, it was actually the second time. The first time is when I was raising money for some of the house flips. That was wild because I could learn that I could raise money. And this was a very simple 6-month term, 12% interest. And it was surprisingly easy to raise money because everybody knows real estate. Everybody understands interest. And it's only 6 months, $25,000 minimum, right? I blew my mind. So there's 3 then, 1, right? The second one was my first syndication was that 12 unit. Like I said, it was much harder than I thought. I thought I could just go back to my normal investors and no one wanted to invest with me, right? It's a different thing. It's a 5-year hold. Minimum was $50,000. I didn't get interest, right? It was like equity. Well, what is equity? How do I get paid? It was just they were asking too many questions, too many objections. So it was much harder to raise money for that deal than I thought. And so what I learned from that is that you really, in raising money one-on-one, you have to build a relationship with that person, right? Now, I did have a relationship with those people, but not in the way where we're investing long term, right? So the relationship there also wasn't a fit. The people I was borrowing money from didn't have $50,000; they barely had $25,000, right? So there was not a fit either. But a lot of people, what they do is they start raising money once they get a deal under contract. Well, now you got 45 days to raise money, and people typically fail to do that because it's almost impossible to do that. So what we teach people is to start raising money right now by using something called a sample deal package, where you create an investor package from a real live deal that you get from a broker. The only thing is you don't have it under contract, but you use it as a conversation piece, and that's when you start having meetings. So you get financial commitments called soft commits from people. Right now, if you get 5 people who said, "Oh my gosh, if you find me a deal that looks just about like this, I would be very interested in investing $50,000 with you." You get 5 people, $250,000. How much more confidence would you have in making an offer in $1 million building, right? Versus not having anything behind you and you're biting your nails going, "Okay, I'm going to do it. I'm going to sign this thing. I'm going to sign this thing. And I have no idea where the money is going to come from." That's stupid, right? So that was realization number 1, is to start raising capital now and start having those conversations with potential investors. So that's probably realizing that. So that went well for a while. And then there was a deal in 2018. It was a 46 unit in Birmingham. I needed to raise $650,000, and it was a bit more than I could raise one-on-one. And I had built this list, right? Because it's now 4 years into my online thingamajig campaign. And I did this webinar, and we could not raise the money. It was like this giant slap in the face about, oh my gosh, who's on my list? Like, why aren't people want to invest with me, right? So this, again, back to, I'm just going to go online. And I had an email list at the time and a social media presence, and no one's investing with me. Now, we got the deal done, but I was like, what is going on here? And I discovered that if you're going to go online, you actually have to build trust with people online, which I wasn't. I wasn't producing content for passive investors. So they got on my list. I did have a lead magnet, good for me. So I was getting the emails, but I wasn't actually talking to them. I wasn't putting out content on videos or even podcasts to that avatar. I was doing everything for the active investor, right? But passive investors, they're different. And so that was the lesson number, where are we now? 3 is to start. If you're going to go online, you have to commit to producing content. Oh, I have lesson number 4. If you really want to scale it up, and that's very good, you can get that up to $5 or $10 million. But if you really want to scale, you really have to very strongly consider joint ventures. Joint ventures with what's called capital raisers or fund managers, people who specialize in raising capital. And so I came across one of these people, and his problem was that he had access to capital but didn't have deal flow. I, at the time, had the opposite problem. Because of my platform, people were bringing me deals, and I couldn't raise the money for it. So guess what? We joint ventured for like 4 deals, and it was awesome. In 2019, we did a deal. It was $9 million. It was a huge deal. It was a 261 unit in Memphis. $9 million. We raised $3.2 million. When I say we, I mean he raised the majority of $3.2 million. And that thing was a lights out profitable deal, right? The point is now all of a sudden we're doing a $10 million deal before it was a $1.6 million deal a year before. So really the joint venturing, the one-on-one, going to online marketing, going to joint ventures, or even a combination joint venture should happen much sooner than that, really allows you to scale much faster.
I love that, man. I think that's incredibly interesting. Kind of that almost like a path of progression in a sense. It makes a ton of sense. You know what I mean? And do you think too, from an angle of like, what are your thoughts on like if you did like a joint venture first, for example, like say, someone
I would recommend it. Yeah. I would recommend it. Again, don't do what I did. Yeah. In our world, one-on-one and joint venture basically at the same time. You're on dual tracks. Yeah. So I advise we teach everybody to joint venture right from the start. So, and that's because there's really 2 career tracks in a syndication. There's a deal finder and the capital raiser. And people typically fall in one or the other bucket based on their personality. So if you're more of a numbers person, a little more analytical, you're going to naturally gravitate towards the deal finder side. If numbers is not your thing, you're a much more relationship person, then you're going to gravitate more to the capital raising side of things. Now, some people say, I can do both, but just because you can doesn't mean you should. Exactly. So what we teach is figure out which track you want to go into. You got to learn the fundamentals of apartments, obviously, but then figure out a career track and then partner on the other one right from the start. Because people who do that, those partnerships, it's not 1 + 1 = 2. It's 1 + 1, which is far greater than 2. Because if you have one person, all they do is focus on deal flow, and one person, all they do is focus on capital, those 2 will do far bigger deals faster.
Yeah. It makes a ton of sense, man. It's complementing your not downside, but complementing the other, areas that you're not as strong in. Absolutely. And the same for the other person as well.
That's right.
Yeah, absolutely. No, I think that's incredibly interesting, man. And one thing that I did want to stem on as well, I did find it fascinating. I have seen this concept before, and I like how you brought it up, was when you went back to, your investors for that 12, or when you're trying to do that 12 unit, and when you went back to your investors from, like the single family flips and that type of thing. And like a lot of the times the match and the dollar amounts and everything wasn't matching up, from those folks. It's almost kind of like a whole different type of like sub asset, like investment, you know what I mean? And I think it's something that is fascinating, especially because, you had those folks from the single family space, that know, like, and trusted you and would probably just write you checks if you asked for them, I assume, but then jumping into the multi space, something that's still real estate, it's still a house, it's still a property, but something that's a little bit different, that has a lot more of a business plan, a lot longer of a time horizon, and those folks not really wanting to bite into that apple. I do find that very fascinating. Longer time horizons, like higher dollar amounts, that type of thing. It's almost like it's, kind of starting in a different subsector, even though it's still within the real estate, like value add ecosystem. I think that is interesting. But yeah, no, I think that's incredibly cool, man. Absolutely. So what's kind of next for you, man? What are you working on now? I think you mentioned growing the education platform, growing the investing company. What does 2025 look like for you?
Yeah, I mean, 24 was a kind of a rough year for a lot of people, especially if you owned real estate. There's a lot of people who were struggling, and we were not without our own struggles. And so I view 25 as kind of getting back to a growth mode. I think the advantage of what we went through is we had several problems. One is we had operational issues due to a rapid rise in interest rates, but also we had a tough time finding new deals. And that's kind of a double whammy, right? So a little bit double whammy. So what we decided to do is really focus more internal and really focus on our operations. So we want to kind of finish that plan through the middle of 25 to really stabilize our operations. So across every function, investor relations, asset management, all those things. And there's just certain things we want to do to really make sure that we have the right people in place, we have the right processes in place, so that we have consistency. We have consistency across all of our properties, how we deal with all investors. In fact, how we deal with different tiers of investors, right? People who invest $1 million, maybe you treat them a little different than people who just invest $50,000, something like that. So that we can get back. And then, yes, we'll do a deal or a deal or two, but we're not really going to do a lot of scaling. Now, having said that, we do hope to get back into growth mode later in 25, because we already see the deal flow improving as it were. And then by then we will hopefully have really not that our operations was bad. I think it was a solid B or B minus. Okay. Which is probably argue better than a lot of other operators. But for me, I'm not happy with a B because I get A's. Okay. I get A's.
Hell yeah.
And I want an A. And so, if we're going to throw fuel on the fire, I want to make sure that we're operating with excellence. So to me, I think I'm looking forward to 25 this year, because I see a lot more opportunity to do deals. And so moving forward, I think that's going to be great. On the educational side, I'd like to reach more people. We're starting to market to people who don't necessarily have multifamily on the brain, but they have real estate on the brain. In fact, they not only have real estate on the brain, they may have already bought a rental or two or done a flip or two. And I'm going to try to talk them out of continuing on that path and into getting into multifamily, right? There's a lot of questions and issues and objections people have. Well, no, let me just invest in this. Let me do this thing for another 10 years. And then I'll take my experience and the money I've saved up and I'll graduate to apartments. It's not a bad plan, but it's not the fastest, not the best plan either. So you have to talk to people like that differently. You have to produce different kinds of content. The process takes a little longer, perhaps. And so that's kind of the nut I want to crack in this year and just reach a larger audience.
Yeah, I love that, man. It makes a ton of sense. And it goes back to that, kind of that central theme of like relating to your audience. I feel like if there was kind of like one word to like summarize like most of the conversation that we've had, it's like just relating to the individual and like, just I guess down to like the one-on-one level, and how to serve those folks the most. And exactly to your point, man, some of those investors out there that, are buying the single families, buying the small multis, myself included, but it's a different conversation. And I guess giving exposure to a different type of plan within the multifamily space to be able to be like, hey, you might be able to leverage the equity and capital that you have today to be able to make it work a lot more efficiently, and be able to serve you in a better context faster, hopefully.
I think the key thing for me is creating clarity. And I say that because I had not created clarity for most of my life. And I think a lot of people don't have clarity. So for example, if I'm flipping houses, somehow I'm not clear on what I really want. Because if I really wanted financial freedom, why would I actually flip houses?
Exactly.
Right? Okay. If I was really clear about what financial freedom meant, meaning actual real estate income to cover my living expenses, why am I building a rental portfolio, right? Because am I clear of the fact of how many houses I need and what the headache would be to manage that? It's like, am I really clear on what I want, right? Am I really clear about the game plan to get there? And most people, they either don't really know what they want or they don't have a clear game plan on getting there, right? Yeah. And there's so many real estate. We talk to people all the time. Hey, what do you want? I want me some financial freedom. Well, what are you looking at? Well, I'm looking at the single family. I'm looking at the short-term rentals. I got the Airbnbs. Oh, I'm looking at a franchise. I say, come on, man. Like,
it's the whole menu.
It's okay because in the beginning you're seeking. Okay, like I was as well. But there's a lot of people who constantly seek. They seek for years. They're attending seminars or doing this, right? Get really clear. I mean, the way I would do is get really clear what you want. I want financial freedom. Okay, well, what vehicle do you want to get there? Because there are different vehicles to get there. You can start digital marketing, for example, right? If you start creating courses or write books, right, that could generate some passive income. Are you a more digital marketer? Are you a more course guy? Okay. Do you want to maybe buy some businesses, right? There's people that teach how to buy businesses, buy some laundromats, buy an electric company, okay? Like, do you want to be a business owner like that? Or do you want to use real estate? Let's just start there. Like, where's your affinity? And then when you kind of narrow it down in the process, talk to people who have done that thing. Talk to people who do own laundromats, who have bought a business before. Talk to people who have built a digital marketing business. Talk to people who have actually achieved financial freedom with real estate, right? Do you think that that's for you, right? Spend time talking to people who have done that thing. And then once you get some clarity around that, then figure out how to get there. And it's always, you should never do this alone. I don't know what my problem was doing all these things alone, right? Including the restaurant business, stupid. Getting in apartment buildings, no help whatsoever, right? So if you got it, then get help. Figure out who can help you get that thing the fastest, to help you avoid the big mistakes, and people who will expand your comfort zone, people who will give you resources and things you could never figure out or take a long time to figure out, right? Why do we all try to figure things out on our own? So that's my game plan from, chaos in your mind to a dream, from a dream to an actual plan.
Yeah, I love that, man. And I think about that kind of thing a lot, because there's so many folks out there that, definitely want to do something different, other than just what they've been doing with their 9 to 5 and that type of thing. But there's so many different things to look at, so many different things to look into. Like, maybe this is for me, maybe it's not for me. And it's one of those interesting dynamics of like exploring a lot of these different things and tasting, I guess, if you will. But like, time's still ticking at the same time. You know what I mean? The days are going on, the weeks, the months, the years are going by. So it's like, you can't be tasting forever. You know what I mean? And I feel like that's the biggest thing, man, is like to be able to, look into these things, these different, I guess, asset classes, and that type of thing, what you want to look into, like communicating with people in those spaces and really like just digging deep into it is your best way forward. Not only to get exposure into like, what do these industries really look like not just, the stuff you see on like social media or whatever, like all the sexy stuff, but like the real shit, and at the same time, not only getting exposure to those from a really good source, but also limiting your downside of, jumping in on, more alone and hopefully, not in too deep of water by accident because you think it's something cool, so I definitely agree with you, man. I feel like people are the best way to kind of figure out what you want, and surrounding yourself with the right folks in some of those different spaces, cutting things off that, aren't really a fit for you, and then finding the thing that you really want to jump into and then going all in on it as quickly as possible because time's ticking. Yeah, no, I 100% agree with you, man. And I feel like there's so much within that too. I mean, even when you do find that space, and all the shiny objects, I guess, if you will, are kind of off the table. Like, there's still going to be, folks, I guess, in more of like a vertical system of like, oh yeah, like you buy, do your first flip or buy your first 2-family or whatever, maybe like a couple years later, buy a couple more, buy a commercial, property for the first time. Like, there's going to be folks as well using that same guiding principle, of having, the right influences around you to help you level up in more of a vertical sense once you find that space that you're going after. And to your point, eventually, if going to apartments is your thing, like, you definitely need somebody to help you get there, and you don't want to do that alone. So yeah, I love that, man. That's an awesome theme. So Michael, this was awesome, man. We're on like social media and everything. Can you be found? I'll tag everything you have. I already saw a bunch of it. But,
you can find me at the Michael Blanc is our handle, themichaelblanc.com, the Michael Blanc on Instagram, etc. It's a place to find me. If people are interested in learning more about getting into apartments, which I love to do, we have a free course, and it's called Apartments 101. Right. So if people go to apartments101.co, they can actually access the course about 45 minutes long. It introduces people into the world of multifamily investing, especially coming from a more of a real estate, single family house investing mindset. So it's apartments101.co.
I love that. I'll tag everything in the description down below, guys. Go check that stuff out. Michael, thank you very much, man. This was awesome.
Awesome, man. Enjoyed being here. Thanks for having me.
Absolutely. Take care, my man. Thank you.
That's a wrap for today's episode. We want to thank you for being a valued listener of the Creating Wealth Podcast. Make sure to visit www.creatingwealth.com to connect with us. Dive into our ever-expanding library of informative blogs and explore a wide range of additional valuable resources. Stay tuned for our next episode as we continue to create wealth together.